August getting off to a cold start. The S&P 500 and Dow getting hit in a late-day sell-off while the Nasdaq eked out a gain. Stocks getting tripped up over worries about Delta variant slowing economic growth. But our next guest believes it'll still be a winning month for stocks. Let's bring in Tom Lee, head of research at Fundstrat Global Advisors. He's also a CNBC contributor. Tom, great to have you with us.
Thanks,
What makes you so confident about August?
Well, I think markets are anxious about two things you already addressed. One is the Delta variant across the U.S. and the fear that this could trigger new lockdowns. And the second, I think, especially coming into play today, is that the 10-year continues to sink lower. So despite expectations across the street for inflation and higher real rates to drive higher nominal rates, the 10-year is sinking. So I think investors are pretty nervous about those two things. But I think between now and month end, we think the odds are high that the Delta variant could peak. One of the reasons we believe that is hospitalizations incrementally for COVID are actually beginning to roll over. And the second is that, I think the 10-year is sort of at an important juncture here. It's near the 100-week moving average, and it looks like it could potentially be reversing. So I think you could have higher rates into month end or Delta rolling over, and both would trigger a risk-on rally.
The Delta rolling over, when we've seen the charts of the UK, the cases peaking, we've seen sort of a similar chart if you overlay that with, I think it's Missouri in terms of its caseload. And so those things are very promising in terms of data. But in terms of your call that the 10-year yield will actually emerge from this critical juncture and go higher, is that based on anything, or is that just your belief that, because it sounds like this whole bullish call for August is predicated on these two things, and one of those things is sort of just a hold your finger to the wind kind of call?
That's right. I mean, markets are unpredictable and interest rates are even more unpredictable. So again, I would probably be more appropriately saying, I think the probabilities of rates rising more than consensus expects is what we think will happen in August if the Delta variant starts to roll over. So I think interest rates and cases and markets are all kind of connected here. But really, over the next couple of weeks, we think that plays out favorably for stocks.
Hey, Tom, I'm obviously concerned, like everyone socially, about Delta variants. I'm not worried about the long-term impact on the economy, frankly. I'm a lot more worried about the Fed's role in the market. So as you look to the next couple months, because it's all about the Fed, and Lael Brainerd was out there late last week, and I think her voice is probably as loud as it's ever been relative to her place in the Fed about, the Fed's got to wait for at least September data. That probably doesn't come out till October. There's not a Fed meeting till November. I mean, doesn't this give you kind of the view that the Fed is not in your face until probably late October, November?
Yeah, Tim, that's a great point. I mean, markets really should worry about the Fed because the Fed is one of the most important influences on the market. And while last week's meeting might have had some hawkish surprises, ultimately the Fed can't, the Fed has no crystal ball greater than the markets. And if it can't see around the Delta variant and the hesitation it's creating among corporates and even OPEC, I'm not sure that anyone should say the Fed is suddenly more hawkish. I think it does give the Fed a dovish tilt. And as you know, a dovish tilt is great for stocks.
Hey, Tom, it's BK. So let me ask you about Bitcoin, because what we've seen with Bitcoin, it has not been correlated to many assets until recently. We see the correlation with the S&P 500 growing, the correlation with copper growing a bit. So does Bitcoin fit into this entire framework of the wall of worry, or is there something different going on there?
Well, Bitcoin is volatile, Brian, but I've tended to view Bitcoin as a risk-on asset. And I think especially outside the U.S., it's probably a proxy for risk-taking much more than the local stock markets, globally. And in the second half, I mean, I think that if Delta rolls over and interest rates start to stabilize, everything rallies. I think Bitcoin's holding up really well. It's at the upper end of this 30 to 40,000 range. Obviously, it took a hit today because of some of the, the infrastructure bills, the tax code around brokers and crypto, but also there have been some actions within the crypto community. But yeah, I'm optimistic on Bitcoin rallying into year end.
Tom, great to see you. Thanks for your time.
Thanks for having me.
Tom Lee of Fundstrat. Jeff Mills, what do you think of this everything rallies kind of call? In particular, energy, which had a terrible month of July, and technology, which Fundstrat recently upgraded.
Yeah, well, I think you've seen some extremes across the board. Energy being a place where you had 0% of stocks in the energy sector trading above its 50-day moving average. So I think there are opportunities there, and I think you've seen similar things in rate. So I think you can make the rate call technical. If you look at TLT, for example, flows into TLT, so people betting on rates going lower are now approaching the 95th percentile. So a pretty good contraindicator that I think we're closer to a bottom than not in interest rates. And because I think that, and because I don't think Delta shuts down the world economy, I would rather be in places that have already experienced some level of pain and are better positioned for an economy that I think is supportive of cyclical market leadership. And I look at the way interest rates and growth have behaved, and I'm surprised as rates again have come down that you haven't seen more outperformance in growth. So perhaps there are the winds of change again relative to market leadership. And you can look at industrial metals like copper, there's strength there. You can look at some of the classic resource names like BHP and Rio starting to outperform. And then even looking at European and Asian cyclicals, those were areas of the market that actually led U.S. cyclicals back in 2020 in the fall before we saw that leadership shift here. So we're seeing that again. So I think I would rather be positioned there going forward.
I mean, to Jeff's point, IGV today, you would expect it to be up a lot, is flat.
You would. Also, when Jeff mentioned Winds of Change, I know it's one of your favorite songs by the Scorpions, and I know you were kind of about to start whistling that.
With a C, with a K.
With
slip that in there.
With an SC. Yeah, I do think investors need to stick to their guns on having views. Like today, you had weak ISM and some PMIs around the world, and suddenly growth's off the table. And I realize the 10-year's been telling us something now for 3 to 4 months. But look, if you believe in reflation trades and if you believe in banks and you believe that, if anything, that the Fed is going to have to move at some point, you want to own some of these industrials. And I just think that there's been a lot of opportunities to buy weakness. Stay there.